Hello, everyone. Welcome to the stock-specific class here for Thursday, September the 9th. We've seen kind of a little bit of a whipsawing market over the last few days. I'd probably get used to that. We're probably going to see a lot more of that over the next probably couple months as the traders try to disseminate all the information they're getting and try to forecast what the Fed might do. I mean, everything's going to be really scrutinized, every little bit of data that comes out. Not that it isn't already, but there's just that we're kind of at that point where the market is trying to figure out the next move. It's trying to figure out whether inflation's the rates are going to be we're going to get into a tightening phase. Are we going to be in a stagflation phase where growth is we have high inflation but low growth? Is inflation transitory, or is it a bigger problem? And I think it's been a reflection of how the market has really traded over the last couple months, where we really haven't seen these confident bursts take place. But on the flip side of that, even when we've had some of the selling, we haven't seen much panic in the selling. The last couple of days, yesterday in particular, there just wasn't any panic behind what was going on. So it's not surprising to see the market rebound a little bit today. Although I wouldn't consider today a strong, confident rebound, but I think it's going to be that way for a little while. Okay, so we'll kind of keep an eye on that. As far as the direction alerts, we've kind of backed off from those extreme levels with the selling that's taken place. So again, nothing in here indicating that we're in an extreme overbought condition. Breadth, again, we'd like to see on days like today in particular that breadth increase or get better. That gives us a little bit more confidence of the market going higher, rallying higher. We'll keep an eye on that over the next week to see if that improves. Sentiment has backed off a little bit. It's been in kind of the high range for most of the last couple of weeks, just kind of still sitting there, but nothing just indicating, definitely not anything indicating that we're at an extreme or in an extreme overbought state. Now we have been we did get a little bit overbought there recently, and if you remember back in the previous updates, I said, we're not quite at the real extreme range I'd be looking for that usually triggers those bigger sell-offs. But you can get these milder sell-offs in those conditions, and I think that's kind of what we're seeing here over these last couple of days. I'm still not too worried about the market continuing to go forward just yet. That could change quickly, and it could change overnight. If something happens, I'm ready. I don't have I'm not trying to be a cheerleader for the market, so I'm not trying to look for reasons to cheer for the market to go higher. I want to be as objective as I can to read what the price action is telling me and what the trend is telling me, and I don't see anything in there that would tell me that we have to worry too much just yet. The buy-sell ratios, you see them come closer together here. Look like they might cross a little bit if there's some continued selling. Now, the buy-sell ratios of the entire market is important down here. We're still above 1, but barely above 1. When it dips below 1, we want to be careful about adding too many new positions to the portfolio. It's just not usually a great condition to be aggressive or to add too much. We want to be a little bit more defensive in that situation. This other sentiment indicator here is backed off. We mentioned it hit this range, and notice how, again, we got this little mild sell-off as this indicator hit that extreme range right there. This is why we do want to pay attention to this. It can exceed it, meaning it can get even more overbought. I think it will when we get into a situation when the market is really going to get extremely overbought. But anytime the sentiment indicator gets close to that extreme range, we could probably expect to see little pullbacks, a day or two where the market sells off a little bit. And so it shouldn't be surprising if that happens. It's been a pretty accurate indicator there. Taking a look at the main market ETFs here. Let's take a look at the SPY. I don't want to go through the whole list. We did that on Tuesday. But you can see down a little bit today. We were up a little bit earlier as we had opened a little bit lower. We pushed a little bit higher. Now we're down towards the lows of the day. Yesterday we had sold off and then rallied off the lows of the day. So there's a little bit of an indecision there. And if we close at the lows today, this could indicate that, actually in context there, when you have a drop and you have an attempt to rally, buyers are attempting to push things higher after the drop, and then you end up falling back down. That's actually not a strong bullish signal, but it's usually a signal that there's buyers there, that buyers are, somebody at this point thought the market was worth buying and was able to push things higher, even though it faded and the sellers were able to gain control. It tells you that there's still some buyers there. And if that happens near a, kind of a support area, the breakout area, that can be a sign that the market may try, or a stock may try to find some support there and generate enough buyers that could start to push things higher again. We'll see. It's not, like I said, that's not a screaming buy signal or anything right there. But and if this shows up near a top, it's actually more of a bearish formation. We call that a shooting star candlestick formation. But I think in this context, and there's not a big drop there, so it's not a whole lot of price data ahead of that move. But I wouldn't be too concerned with that just yet. It still could move a little bit lower off of that. But again, we're not just seeing anything that we're not in the selling. We're not seeing anything that looks like it's causing the market to panic in any way. The Dow down slightly, kind of the same thing. Tempted to rally earlier. It's kind of slid a little bit. Most of that's happened just within the last half hour. So I've been kind of prepping for the class. So I didn't, when I was looking at it, we were kind of basically flat up a little bit. So a lot of that's happened just in the last little bit. Nasdaq 100, again, you have this kind of flat move right here. You can dip a little bit off of these, but overall that still looks like it wants to go higher. I talk about this all the time, that topping formations, usually when you reach tops, they tend to be more pointed, meaning you kind of reach a peak and then you sell off and it kind of reverses. Now this is a little bit more pointed right here, although that was just a quick pullback. You don't see a lot where you move sideways and then drop significantly. I call these volcano tops, and the key about those are that they're rare. They look like top of a volcano. They tend to be rare. You can make the argument this would be a little bit more of a volcano top. If it did drop, it's possible it could, but it's rare. Knowing that it's rare, this is probably just a correction for another move higher. But knowing that you can still get a little bit of that dip, it could be, kind of a wave A, wave B, wave C, get a little bit of a dip down before it takes off again. And sometimes those little dip downs are what creates the buying pressure that pushes things higher. When you're moving sideways, and this is important just to point, I point this out all the time, but for those of you that are new, it's important to recognize that behavior. When things are moving sideways, it's a reflection of indecision. And remember, the chart we're looking at is taking into account all the traders that are looking at it. So if it's an individual stock, it's all the traders that are interested in that stock. You may not be interested in that stock, so you're not part of creating that chart. But anyone that's either looking to buy or looking to sell that stock is part of that decision-making process. And whenever you see the price move sideways like that, it's telling you that the majority of those participants are indecisive. They're not quite confident it's going to go higher, so they're not buying additional shares, or they're not quite sure it's going lower. People that are bearish on the stock aren't quite sure it's going lower, so they're not selling aggressively at all, and it gets kind of stuck in that range. And but the previous trend is usually a much stronger determiner of breaking that indecision. If the trend was up prior to that sideways movement, well, what pushed that up? It was aggressive buying. The buyers were very aggressive. So the buyers are very aggressive, and then they became indecisive. Okay. Now, what about sellers? What would bring sellers in? Well, sellers might look at that move as being done. Oh, this has gone far enough. That stock is now expensive. I'm looking for this stock to go down, but it's been going up, so I'm not overly confident it's going to drop right here. So I might be shorting a little bit, but not aggressively. You might have people that were buyers that say, boy, that stock's moved up quite a bit, so I'm going to take some profits. That could add to the selling. I'm selling a little bit. But usually when it's not dropping, what happens is those buyers that were taking a break are saying, hey, this stock is not, I thought it was a little overextended, but this thing is not dropping. This hasn't dropped for 3 or 4 days. Maybe this thing is going to go higher. And so they start to build more confidence to start buying again. The sellers that thought it was going to drop, it's not dropping. The trend had been up. They get a little bit spooked that maybe they were a little early shorting the stock and maybe it isn't going to drop right here. And so that's what there's a reason why when a stock is moving sideways and the previous move was up, there's a higher probability that it's going to continue in that trend direction. Now, in the very near term, it could still be bouncing back and forth. Maybe there's a little bit of selling that brings it down, but maybe that little bit of selling that brings it down is exactly what some of these other buyers wanted to see to jump back in. They were waiting to buy. Maybe they took profits down here and they've been waiting for a dip to buy back in, and that little sell-off gave them the reason to buy back in, and it pushed things higher again. So what I'm trying to do, and this is kind of, I wasn't planning on going over this today, but just in the context here, I'm trying just to explain the psychology of what's creating these patterns and what's causing these movements. Because if you understand that, then you understand yourself a little bit better, as well as understand, what the general crowd is doing. I can't look at that chart and say, boy, the buyers are really strong right now and they really want to push this stock higher. That's not true. That's not being reflected in the price action. Now, if suddenly you had a big, huge bullish day out of this, then I could say, all right, the buyers were indecisive, but man, they're really strong today. That could be the catalyst to move this thing higher for a few more days. And we're talking about an index here. Okay, the index looks like it's ready to go higher. Let's go look at a bunch of tech stocks to see if they have patterns that look like they could take off, and I could trade those individual stocks. I mean, this can affect a lot of your individual decisions if you're able to kind of read what's going on right there. Okay. Now, again, all of this is based on probabilities, and like I said, typically when you have a sideways move at the top, you're not going to come straight down from that, but it has happened. So I can't say it can't happen. I could just say that would be the lower probability move for that to happen. So maybe I do go buy a bunch of stocks and this thing does drop all the way down. Okay, I'm going to get hit. I'm going to have a little bit of pain there. But if you manage your trade properly, you manage your money properly to where an unusual move can't wipe you out, then you regroup and you start trading again. If the majority of the time you're sticking to the higher probability outcome or trying to trade the higher probability outcome, over time you're going to outperform. You're going to be on the right side of those trades more often than you're on the wrong side of them. All right, I did not mean to go off of that tangent there, but hopefully that. One thing I am trying to do is make sure these updates are exactly the same every day, to where you feel like you're not getting anything new. It's just the same things being repeated. So hopefully that hopefully that helps somebody today have a light bulb go off and help in their trading down the road. All right, so Nasdaq, it looks like it still is acting like it wants to go higher. The Russell 2000 had a nice rebound. Oh, it's faded a little bit. It had a nice rebound. Yeah, this all happened before class started when I was prepping, because it faded. It was all the way up here. which was good. It was showing that the small caps were rebounding today. Now that's still okay. I mean, it's showing that buyers were there early, and we still have time left in the end of the day. Could the buyers still push things higher into the end of the day? I have to see if there's a news event that came out that I didn't hear that's triggering this. I'm not noticing anything just yet, but that was also a reflection that there was some good breadth taking place because the small caps were overperforming or outperforming the other indexes early on. Now we'll have to see if that really fades into the close. You know, that could be a little bit of a bearish sign because you'd want to see a little bit more strength from those small caps as kind of a leading indicator there. But it goes back to how I opened up the class today. September, October, we're probably going to see a lot of back and forth, a lot of indecision, a lot of whipsawing taking place, and so we might have to be a little bit patient with some of these moves. I did want to skip down and show. Well, the VIX did spike up a little bit yesterday, but it then kind of opened higher and then kind of faded into the close, which is kind of a bearish reversal, which would be bullish for the market in that case. I'm still not seeing any panic on the VIX, but that is something to keep an eye on. If there is something that comes out of nowhere that freaks the market out, yeah, we could see a bigger sell-off, but we can't plan on the unknown. You know, we can't plan on trading based on some news event that's really bad that we don't know about yet. We'll deal with that if it happens, but I don't see anything yet that's causing the market to get too panicky. I wanted to go to the chip sector here. One of the things I talked about on Tuesday was that it looked like we had moved back up here. We were having a little bit of a down day on Tuesday, but it looked like we might have one more move down to kind of create an ABC correction. And it looks like that's taken place. Today looks like a little bit of a bullish inside day. The body of today it looks like it's contained within the body of yesterday, and it's in opposite directions, at least so far. If it can close higher than the open today, that'd be a little bit of it's not the strongest bullish reversal, but it is a slight bullish reversal. I like the fact that chips have broken out. They pull back a little bit. Let's see if they can start making a run. But that's something to kind of keep an eye on there. But the way that looks too, it's not causing me to think that as far as a leading indicator that we have a lot of concern. And then the Dow Transportation Stocks down today. I was hoping because they were up earlier. I was hoping they'd hold this low. We're right at that low. This is the big low. You don't want it to drop below, but even with that, you still want to see higher lows there. So that could be a little bit concerning from the Dow standpoint. We'll see how that plays out. If it can rally off the lows there, it closes right at that low, it's probably going to break through it. Whenever you come down strongly into a support area, you want to see a reaction to it. You want to see it come off of it a little bit to show that there are buyers there because these charts. I'm not the only one that can see these areas. Any trader that's been doing this for a while that has been trained in technical analysis can see these support levels easily. When you come down to a support level and you close right at it, usually it's not going to hold. When you have a big down day and it closes right at the support level, you hope it's going to hold, but usually it's not going to hold. Usually that there's too much momentum going into the close there. Really, the only reason why I didn't break it was because the market closed, right? It ran out of time. And so usually it's going to end up breaking it the next day, most of the time. If it can come off the lows a little bit, that shows you that there's some buyers there. If it can come off the lows and create a little bit of an indecision candle, more like a spinning top or a doji, something like this, then there's a little bit more hope that it could rally off of that. That's something to keep an eye on there. That's not looking as good. All right. So overall, again, market conditions aren't great because remember what we're doing is we're getting into specific stocks here today, and so we want to do the general, get a general feel of the market to make those decisions. And I don't see a panicky market, but I also don't see an overly confident market. So I might want to limit any new trades. I might get into one if there's a nice pattern. By the way, I did get out of a couple trades yesterday in the portfolio. I'll go through that in just a little minute and explain why. So that's kind of the condition we're in right now. I don't know if I'm going to add too much today, maybe one or two if the patterns are pretty good. All right. Let's look at some individual stocks here. And I want to, a lot of the stocks, we've kind of gone through and almost all the stocks in these top sectors, we already have them in our watch list. There's not a lot of new ones coming up. One thing that I do think could start to make a run, it's down right now, but could start to make a run, is the medical sector, healthcare. There's a lot of charts they're looking pretty good. And even utilities, although I'm going to explain a way we could trade utilities. Well, kind of my preferred way to trade utilities here in just a second. But let's go down into the medical sector. And there's a lot of high strength ranked stocks that have been beaten up a little bit in the sector. And that's why I want to see if we can find some that look like they might be turning around. Now, we have one NTLA that we're already in the portfolio. I like this SENS, Senseonics Holdings, 98 strength rank. I'm going to switch to signals here, but again, look at you have the nice bowl-shaped move right here, and then you see this little pullback right here. It looks like an ABC pullback. A little bit of a bullish inside day candle today. Oh, it looks like it's gone back to buy. So it was a hold signal yesterday. Boy, it's got to be right on the edge there. So this one could go back to hold, especially if the market's fading a little bit. That might be one we might have to make a decision on. I'll wait on that one. This might be one we go ahead and get into because it has a buy signal, but I'm afraid it could go right back to hold right when the market closes. We could, because again, if I put this in the watch list and put the alert on, if it stays at a buy signal, I'll get the alert tonight and I could get in it tomorrow. And that might not be a bad way to go about it, especially with a little bit of the indecision in the markets today. That way, if it does close as a hold or even comes down a little bit more as a hold, we have a little bit, we're not riding that move down. But this is one that I want to. Well, let's go ahead and put it in the watch list, and then we can make the decision on what we want to do when we start going through the portfolio management. And I'm going to go ahead and put the alert on it. In case I forget to do it later, it'll send me that alert tomorrow. By the way, our watch list is getting kind of big. I am going to kick a couple stocks out here in a little bit when we go through and manage that. All right, the medical sector. I also like this ORMP, 97 strength rank, Oramed Pharmaceutical. Had a nice move up right here, a sharp sell-off, a sharp rise. So we had kind of that V-shaped move, and then it's been corrective right through here. And this also has gone to a buy signal. Now, what I worry about is that this could be wave A, wave B, and you get a wave C coming down. I've seen that happen a few times. So I'm going to go ahead and put this in the watch list again, and that's probably going to keep its buy signal into the close. But we could just wait till tomorrow, get that alert, and then make the decision. I know we won't have a live class tomorrow, though, to go on. What I would do then, and this is how I would approach it then, is if it does hold that move and go a little bit higher, meaning it's going to break out of this area right here, go ahead and enter. If it dips down a little bit, maybe goes back to a hold signal, then you wait because maybe that's wave C. And remember the overall market conditions. And we could consider this at the end of the day, but I don't want to add too much today in these conditions. So, so let's go ahead for now and put it in the watch list. I'm going to go ahead and put the alert on. All right, another one. This Beam Therapeutics, BEAM, 96 strength rank. Now, this is one that I'm going to put in the list just to keep an eye on, but, we had the sharp move up, then you had a sharp move down. That could be an indication of a trend reversal. And then it's been kind of choppy. Now, sometimes, though, these stocks get slammed and they have kind of a choppy move up, but they still work their way back up, but it's just a more steady move up. But you also have to look at the possibility that this was the start of a move down. This was the end of the uptrend here. This is the impulsive move down, and this is the corrective move before having another impulsive move down. Especially with these medical stocks, they could drop very quickly. Their drug doesn't get approved or something like that. It can get slammed pretty hard, pretty quick. We are right at about a little bit more than a 50% retracement of that move down. I mean, it's rallied up, had a pretty big down day today. It's rebounded a little bit today, come up a little bit today. We can put this in a watch list, but what I would want to see is I'd want to see this kind of be the low. I don't want it to go any lower than that, and then keep acting like an uptrend there. Break out to a new high right there. If it breaks out above here, now you're kind of beyond that 618 retracement of that move down. It's retraced more than 61.8%. What does that mean? Well, it means it's less likely that this is a correction for a move down, more likely that you're in kind of just a steady uptrend at that point. And that would give us a lot more confirmation if it could do that. So I'm just going to add this in. Go ahead and put an alert on it. But if it turns around and goes any lower, I'll probably be pretty quick to kick that one out. KDNY is another one under medical. Excuse me. Right here, 96 strength rank. And again, this is one of those where it's a real subtle, lower highs, lower lows. Reaches a bottom right here, has a higher high. So it had an impulsive up, off of impulsive down, impulsive up, and then it's looking corrective, possibly turning the corner here. This thing can move up, go to a buy signal. You know, we could, if it gets up here, we get a buy signal. We could put a stop right in here. Keep a real tight stop on that. Let's take a look at a little bit bigger context here as well, just to. Yeah, the stock has just kind of been bouncing around. It's kind of been moving sideways for a long time. So it may be something like this where it had an impulsive down, impulsive up. This was corrective, and it had a nice little run back up to these highs. Then it came back down again. Maybe it does something similar. But there's still potential there. We could, you know, if we manage it properly, we could grab something off of that. I'll go ahead and put that in the watch list. And there's one more in the medical sector but I don't know if I want to do it just yet. It's AMEH. I like the bull-shaped move, and it's gone to a buy signal as of today, but it's also gone up several days in a row. It's probably due for a little bit of a pullback. It could happen here pretty soon. Might want to wait for that next correction there, next little pullback, because it's not likely it's going to go right straight back up again. So I'm going to hold off on that one. Plus, I have a bunch of them already in my watch list. Under utilities, I was looking at this, and there's not a lot of high strength rank stocks in utilities. This is a 91 strength rank though, the CLNE. I've been trading this off and on for a little while, mostly with shorter term like option trades, but this is one to get in context here. It's come down pretty far. You have a little bit of a V-shaped reversal right here. It's been moving real sideways. That's a lot of sideways though right there. That does concern me a little bit. That indecision shouldn't last that long. But I know that utilities as a sector has been kind of taken off. As utilities, traders get into utility stocks as more of a defensive move when there's a little bit of uncertainty, and there's definitely uncertainty going on. So, you know, when the uncertainty is pretty strong, but there's not panic yet, traders tend to go into what we call defensive type stocks, utilities. These are like your energy or your electric companies and your gas companies. People have to make those payments every month. They're not going to be growing at a huge rate unless populations grow, but but it's consistent. It's always going to be there. You have to pay your utility bill no matter what the economy is doing. These stocks tend to pay higher dividends, and so you're capturing some of that dividend income by holding some of those. Other defensive stocks would be consumer staples. These are things that you buy at the store. You're going to buy shaving cream and soap and shampoo, no matter what the economy is doing. So those are stocks that food stocks, grocery store stocks. These are companies that tend to do well when there's uncertainty. So we can put this, we're not getting into this right now, so we could put this in our watch list. And if we do see a little bit of a breakout of that sideways range, that'd be pretty positive, because you'd probably break out of this kind of couplet handle pattern anyway. It's a small couplet handle pattern, but I like that one. So let's go ahead and throw this one in the watch list as well. All right, that's all I'm going to add for now. Let's go into our portfolio. And we're down a little bit today. We were actually a little bit positive, but that little sell-off happened at the end of the day. Got to do things off. Now, what I did get out of, we go to our trading history here. I took a profit yesterday, and I stopped out of 2 of the trades yesterday. The profit I took was on OPRX. We made $447. Let me highlight that right here. I also stopped out of Riot and MSTR, and so basically Riot wiped out our gain that we had, and then we took a little bit of a loss on MSTR. But let's take a look at those. I can explain those decisions here. Now, OPRX was one of those that I said, I'll pull the chart from there. Let's pull it up here, OPRX. Now, this is one that I said that we had reached kind of that extreme reversal risk. We had a profit on this. We had reached the extreme reversal risk area right in through here. And so I said, well, I'd get out. I was going to get out on a close below the low of the previous day. On Tuesday, we didn't have that close below the low of the previous day. We were close, but then yesterday we did get that close below the low of the previous day. So I went ahead and took profits and got out. Now, it rebounded a little bit today. We could do this all day long in hindsight. Boy, if you would have just waited till today, it wouldn't have been as big of a loss. It would have come back a little bit. Yeah, but it could also have ended up down here, and we could have wiped out our entire profit. So, so I went ahead and exited that one. Riot. Now, Riot was one I went back and forth on a little bit because our stop was at 32. Because I'll pick these round stops sometimes. It was meant to be below this area right here at 32. But the low right here, let's see, I can't see it there. Hold on, let me scroll down here a little bit and do that again. So my stop was at 32, which is below this low. But the low of that day was $30, or no, my stop was at 30, right? Is my stop at 30? Yeah, my stop must have been at 30. It was below that low. That low is at $30.86. Well, yesterday we went below that low of $30.86. We're at $30.26. So we were going to close below this support area right here, but we weren't at my random $30 stop price. Now, I usually base the decision on the close, and so I was waiting until right at the close to decide what to do. If this could have rallied back up above this area, this low area right there, I probably would have held it another day just to be safe. But it was going to close at the lows of the day and below that area right there. So I went ahead and stopped out. Now, there again, it bounced a little bit today. We'll see if that ultimately was the right decision. But look at the pattern, though. I mean, we were expecting this thing to be stair-stepping up. Should have gone higher. It came all the way back down, and now you've gone to a lower low. It's not acting like an uptrend, so get out of it. Now, if we stop out and it does rebound, and that was just a little minor move lower there, and then it breaks out above here again, man, I can jump back in this thing. This thing is probably taken off from here. I can always get back in. That was the smart decision, just to stick with the plan, stop out, take the loss. And then the other one, was MSTR. And there again, our stop was below here. We were going to close below that stop out of the trade. All right. Now, if we go through, I don't know if I have time to go through all of them here, but well, let's take a look at them. PFMT, again, it still looks fine. Our stop on PFMT is right below here. Again, I'm looking for this thing to break out. It's still acting like it wants to break out. Looks like we have higher lows. As long as we don't dip down too further, we had a higher high right here. Still looks like it should break out higher. Let's give it time to do that. RM, it's again, our stop's down here. It looks like it's moving higher now. On this one, if we can get up closer to that breakout area, I may tighten up that stop right below there. It's just too soon to do it, I think. But it still looks fine. It still looks like it's trying to break out. STKS, our stop's down below here. It dipped down a little bit further than I would have liked it to, but you have a little bit of a bullish reversal day today. Let's see if it can rebound off of that and still give us a higher low right there. Now, Tesla, we are in the extreme reversal risk range here. We had a little bit of a bearish reversal candle yesterday, and so what my plan was from yesterday was if we can get a close below the low of the previous day. So if we would have been down today and closed below, looking like we're going to close below yesterday's low, I would have stopped out. I still am going to do that. So here we have a kind of a compact trading day today, but if it closes below that day tomorrow, I'll probably go ahead and take profits there on Tesla. Again, recognizing we can always get back in again. But then that'll change. If we're up, we have a breakout move up, then the same thing. I'll wait till if we close below that low the next day, then I'll get out. If it, maybe it starts moving sideways and then finally it closes below the low of the previous day, that'll be my signal to go ahead and get out. And again, I'm not just doing it to do it. It's because we're in that extreme reversal risk. Now, keep in mind, if it pulls back a little bit or moves sideways a little bit, this could slide back into the buy range, but not yet have closed below the low of the previous day. But if that was in that extreme range, if that was going to be my plan, was to have that tighter stop and to use that technique, then go ahead and do it. Because that's what happened with OPRX. It had already backed into the buy range when it closed below the low of the previous day, but it had been in the extreme reversal risk, which is what triggered me to use that tighter stop, or gave me the choice to be able to use it, which I decided to use in these market conditions. I want to start taking some profits on some of these trades in these conditions that we're in. All right. DDS, I'm not going to do anything on this one. Our stop is down in this range right here. Still looks like it's moving sideways. Should end up breaking out eventually. MOSY, same thing. Our stop is below here. See if it can start to turn back up again. I mean, it still has higher highs, higher lows. Hasn't broken that pattern yet, so we're going to assume it's going to continue to move higher or continue to follow that trend. CAN had a down day today or yesterday, but it didn't stop us out. I'm not thrilled with the fact it's leveling out so much. When you see that kind of bowl-shaped move, you want to see it kind of start steepening. We'll give this a little bit more time to see if it can start to move higher. NTLA, again, same thing. Trying to remember where our stop is on this one. I can't remember if it's right below here or below here, but we're not stopped out yet on this one. This one still looks like it could break out. It's kind of forming some pressure here to break out to the upside, hopefully. Kind of a triangle formation there, ascending triangle formation. HOV really close to stopping out. Our stop was at it was below this low right here. I think it was at 93. 93 was a round stop. Now, what was the difference between this one and the other one I stopped out at that had a round number? Well, this one didn't. It was right at, but didn't close below that low. Both yesterday and today were right at it. So today, the low of today or yesterday was at $93.02. Remember, our stop's at 93. And today's open or low was at $93.17. But it's moved higher off of that. So, I mean, we're real close to possibly getting stopped out. But we'll see if today's move starts pushing this thing higher and we can break out of that range. I'm going to just hold it. That one was real close. But I wanted to explain my reasoning there. That's what was different. If we would have been looking like we're going to close below that low and we weren't quite at 92, I probably would have gone ahead and stopped out. WLL, we're in the extreme reversal risk. Now, we got into this one a little bit late. If we switch this to signals, we got into this right here. So, I mean, I could use a close below the low of the previous day, which could happen here pretty soon if we close below today. It doesn't look like that's going to happen today. It looked like we closed below yesterday's low by the end of the day. But if we do get that, we could go ahead and get out of that one. That'd be more of a break-even trade, though, at that point. It is kind of in the early stages of the extreme reversal risk. You could stick to your original stop if you wanted to, which was down. I think we had it down in this area right here. So I don't have to make a decision on that right now. So, and with that late entry, maybe I won't use that close below low the previous day on this one. Let's see if it can run a little bit and give us some sort of a profit here. And then Futu, we just entered that one on Tuesday here. Again, it's still just looking for the higher highs, higher lows. Had a little bit of a bullish reversal day today. See if that puts in a higher low. See if this thing can break out. No reason to make any adjustment there right now. All right. So do I want to add anything? I'm going to add that SENS. That was from that medical sector. Well, let's take a look at it here. Let's see if our signal we still have a buy signal. It's kind of fades a little bit. So this is kind of iffy. I like that pattern though. I'm going to go ahead and get into this one. Let's see where we put our stop. Let's put our stop. I'm going to use a pretty tight stop here because well, I'll give a little bit of room. Let's go down to this area right in here. This is where it kind of turned the corner, and this is kind of the resistance of the bottom of the bull right here. And that's at about, what was the high of this day right here? Let's see, $3.39. Let's just put it about $3.40 as a stop. And then if we can get a little bit of a movement higher, we could quickly move it up into this area right here. All right, so go to the blue button over here to add to portfolio. I'm going to use a stock specific class. My stop price is at 340. Number of shares, let's start with 100 to see where we're at. Oh, that's way low. About 1,000. That's still low. That's 2,000. 2,500. Okay. 2,500 shares puts us a little over that 1% portfolio risk. If I get stopped out, I'd lose $1,100. Again, you have to factor that into your decision. If that's too high, then reduce your amount of shares, even if it would reduce the risk level down. You want to be able to accept the risk. All right, purchase and go to my portfolio. Okay, we've added that in. Let me go through the watch list here. I want to boot some of these stocks out. One I want to boot out is Blink Charging Company, BLNK. I don't like this look right here because this looks, now that I'm looking at this, back here it was looking like we were hitting higher highs, higher lows. And I was expecting it to kind of go higher here, start showing me that it's in more of an uptrend. But now I'm looking at this. This looks kind of more impulsive. This looks a little bit choppy, more corrective. This looks impulsive. And now this is looking corrective. So this is looking to me like there's maybe another chance for a move down. It's just not looking very bullish right now after the recent movement there. So I'm just going to boot it out. It's a high strength range stock, so it'll show up again if it starts moving. So I could always get back in it again, but we got a lot of stocks in here and I don't want to hang on to all of them. So let's boot that out. And then this Consol Energy, CEIX, we kind of missed this one. I talked about that one. It kind of broke out. I'm going to just boot that out for now. If it pulls back and we see it again, great. But I've just got too many stocks in here that I need to boot some of them out. All right, those are the only two for now. We can go through this list here real quick. Yeah, that one, again, this could just be part of a kind of a C leg here. I'll hang on to that one a little bit longer. The NTX still looks okay, but we haven't got a buy signal yet. KRUS, again, this is going to be key. If it can rally off that low, give me a higher low right there. If it gets any further down towards this low, I'll probably boot that one out. SGOC, like it, just waiting for it to go back to a buy signal. Still looks okay. I mean, I'm waiting for it to go back to a buy signal. We'll get that alert. I booted that one out. I should have booted, I think that was booted out. I have to double check that. The NGO, yeah, this is at the last spot right here, because if it can hold this area, it could still be kind of that inverse head and shoulders. Had a down day yesterday, but it's back up right at that level today. So it'll be a tight leash. If it can rally up from here, that'll be fine. If it drops any further, though, we're going to boot this one out. LXU went to a sell signal, but this still looks like a corrective pattern right here off of this run up. So we'll watch that a little bit longer. And the VIS. This is on Lifeline too, because I mean, it does still have a slightly higher low right there, but any move down towards here, and we're going to boot this one. CPRI. This is getting in, this is based off of that kind of V-shaped move, but this pullback is, although it's choppy, it's deep. This is another one where it doesn't reverse right here. We'll probably boot that one out. I don't want it to go any lower. COPN, this one still looks okay. It has a nice little bullish reversal today. TGLS, that still looks okay. EXC, really close. Could just be a deep pullback, but this has to start moving up. If it has any other move down, I'll boot this one out. And then SENS we just added. In fact, we can take that one out of the watch list since we got in it. And then these are all the new ones we just got into, so we don't need to look at those. All right, let's see if I've missed anything. I'm out of time, and so what I'm going to do for next week, I do want to go over setting up sector ETFs where you can trade the whole sectors. I'll go over these lists with you, because with utilities, I was going to bring this up during utilities when I was talking about the utilities, but I knew I wasn't going to have the time. But I don't usually like to trade individual utility stocks. If I'm being defensive, I like to just trade the sector ETFs. And there are sector ETFs for all the main sectors. Like if you want to trade technology, you want to trade consumer staples, you want to trade financials as a group. You can kind of create a watch list of these main groups. And also you hear on TV sometimes they'll say, well, what's leading the market today? Oh, it's the material stocks are leading the way today. And you may not know what are material stocks. You can go look that up. You can Google that, and they'll show you what are considered material stocks. But let's say that's the strong moving sector, and you just want to trade the group because it's the strong moving sector of the day. There's an ETF that allows you to do that. But I'll get into that next week. Now, next week's schedule, I'm going to be out of town. And when I'm out of town, I still will do the updates, but I have to kind of work them around my schedule. And so it's hard to update the class time for a live class. So it might end up being I just have an hour and I'll do the recording and get the recording posted. So just be aware of that. If you log in on Tuesday and I haven't started 10 minutes into the class, it probably means that most likely it means I already did the class, because if I'm going to do just a recording, I'll try to do it earlier so it gets posted, so that if you're joining the class and it's not there, I'm not there for the live class, the recording should already be available. You can go and view that during that time, so you're not wasting your hour that you've probably set aside for your day to do this. So I'll try to do it earlier in the day like that if I'm not going to be able to do it in the live schedule. But I just want to make you aware of that, just so that I don't upset too many people that came in to join the live session and I wasn't there. All right, that's all I have. And like I said, I'll try to fit that training in on next week on the sector ETFs and go through that and help you kind of set up a watch list of those stocks that you could consider for trades if you want to trade the whole group. All right, thanks everyone. Have a good weekend, and we'll see you next week for the market update. Bye now.